Welcome to Mex News, everyone. Our weekly podcast on Mexico business and finance. How are you, Eduardo?
Doing well, Damien. Yourself?
Good. So today we have an interview with Ariel Fishman. He's the managing director, founder of 414 Capital. He's going to talk a little bit about the M&A outlook in Mexico, private equity valuations, and a few other subjects of interest to our listeners, I hope. And before we get into that, Eduardo, what did you find interesting this week?
Well, just to go back again to the Diablos listing on the Mexican Stock Exchange, they did stock split, 100-to-1 shares, in order for them to make them more accessible, I guess, to the public in general, trying to bring the fans into the stock exchange, which is something that it's commendable, if I would say so, as the Mexican stock market is not necessarily very widely popularly seen. And I think Diablos, as a brand that appeals to the general public, is looking for that, for the general public to be interested and probably make a little money by buying shares in a baseball, basketball, whatever company. We're seeing more of this worldwide, where owners of professional teams list their shares to fund the growth, but also to give the fans the chance not only to cheer their teams, but to make a little bit of cash, if possible, in the outcome of their performance. So they did this. I think this was an interesting follow-up to their listing. It was something that was expected. It finally came to fruition, and we'll see whether this will increase the volume of shares traded on the Mexican Stock Exchange.
I saw on the subject of business and sports that Banorte got naming rights to Estadio Azteca.
So really surprised.
So we're no longer going to be able to call it Estadio Azteca, but Estadio Banorte. I wonder if Mexicans will actually make the switch or not. But under FIFA rules, they can't call it Estadio Banorte in the during the World Cup.
And that's why they I guess they did it. There was a previous occasion when they tried to change the name to Estadio Guillermo Cañedo, and it never really got track with the public. It was always the Estadio Azteca, and then they switched back to Estadio Azteca. Now it's a commercial deal that makes sense, I guess, for the company, or Yamandi, but I guess people that are fans will like to still call it Estadio Azteca, as the place where Pelé and Maradona made big plays.
Yeah, I mean, if Banorte doesn't take hold, they may be spending a lot of money for not a lot of benefit.
We'll see.
So a few things struck me this week. The National Survey of Financial Inclusion, the ENIF, came out, which is the INEGI's kind of survey of the use of financial products in Mexico. And there's some good news, Eduardo. 76% of Mexicans now hold one financial product, at least one financial product. And the number was 68% 4 years ago, back in 2021. And 63% of Mexicans have a savings account ownership.
That's a very impressive number.
49% in 2021. So there's been quite a significant increase in financial inclusion. I think it's driven both by the incumbent banks, the BBVAs of this world, that everyone talks about fintechs, but most of the real day-to-day impact of financial inclusion comes from the big banks. Even Nu, which is the standout success story, is less than 1% of total deposits in Mexico. So, but I think there's also cash remains very dominant, and that's the biggest kind of stumbling block, or the biggest hindrance to more financial inclusion in Mexico. So according to the survey, 85% of transactions under 500 pesos are still made in cash in Mexico. And where in Brazil, we've seen obviously, PIX kind of replace cash
completely
to an important degree, and definitely replace debit card usage and the fees associated with that.
For those who don't know, PIX is like the system where you could buy a beer on the street corner in Brazil, and it's done with your card, and there is no cash involved in those little transactions. You can do anything electronically in Brazil with this new system. Mexico is still a lot of room to grow in that area.
And one of the fintechs, as we talked about last week, PlataCard, raised $160 million. What they said was a $1.5 billion valuation. And I got a few messages from people impressed by the valuation. And I think it's, first of all, if you look at the digital numbers, Plata has done an amazingly good job. It's, in terms of app downloads, web usage, it's now actually even ahead of, Story or Klar, more or less neck and neck with New in many of these data points. And it's ahead of, Cashi from Walmart or Spin by Oxo. So it's done really good. But also a word of kind of warning in general on valuations. This isn't specific to Plata because I don't know the details, but a lot of times companies spin these numbers and there's often there's a bond with a convertible element at a valuation of 1.6 and they call it a 1.6 valuation, but that would be like PEMSA issuing a bond with a convertible into a 100 billion valuation, saying that PEMSA's worth 100 and not 40 billion. So you have to
take it with a grain of salt.
Not necessarily with a grain of salt, but you have to kind of know the details before you can say that
the
plain vanilla equity without any liquidity rights is worth that amount.
Correct.
And that isn't always the case. Another thing that caught my attention on growth forecasts for Mexico being slashed as we speak. Fitch, I think, is the first to go to Fitch ratings agency, cut 2025 estimates to 0% from 1.1 and the 2026 outlook to 0.8 from 1.7. And the main reason, not the only reason, is US tariffs and investment being put on hold, but also domestic factors have been driving growth lower in the economy. Post the election last year was already slowing down as there's a significant fiscal adjustment being made and some concerns within Mexico about the impact of the constitutional reforms. And talking of the reforms, we finally got the secondary legislation on the energy reforms was approved last week. So the Peña Nieto reforms that had opened up oil and gas and electricity to private investment have now been kind of unwound, and we've gone back to a large extent how things were. What do you make of these reforms as well?
I think they are a mistake. I think I heard, as a matter of fact, today that the Sheinbaum administration is very proud because they're bringing back control of the state in these two sectors, which I think was never removed. I mean, one thing is to be regulating an industry with different agencies like we had. It doesn't mean that when Peña Nieto opened up the industry was going to do whatever he wanted. It was just going to bringing more participants with the oversight of the different institutions that were created. And now we're moving back to where Pemex and CFE, the electricity company, will be in charge of those industries. So if you're a private company that wants to invest in that sector, you will be beholden to them. And I don't think that was the right way to go for the Mexican economy. I think the country could have benefited much more with strong public enterprises, but also with private enterprises that would compete against those two big, large public companies. Were there any disadvantages for those two big public companies? Well, correct them, but don't bring back the old system that proved ineffective in a way. And I don't think the new system will be effective. Again, I don't think Mexico benefits from having these two giant companies controlling everything. I think the president gets it wrong in that sense. And I think Mexico could have done much better by tweaking the system that we had created than reversing it to the way it was 6 years ago.
I mean, there's some optimists out there that say the new secondary laws do kind of pave the way for private investment in a more under the control of the state companies. So there's some stories in Reuters and other places about Carlos Slim, reaching a deal or close to reaching a deal with Pemex on jointly operating the Zama oil field and taking direct delivery of the oil when it's produced, and also reaching a deal on this huge natural gas field, Ixachi. So the new laws kind of do allow for that, and Slim has obviously got the capital, the know-how, the political power to negotiate on favorable terms with Pemex. But there's no question, Eduardo, that Pemex is in a very deep crisis. They just reported their 2024 numbers. They lost $30 billion last year. Most of that was driven by the depreciation of the exchange rate that led to losses on their dollar debt. They still have about $106 billion of debt, but their operating profits are basically zero. So someone's got to pay for that interest on that debt, and that right now is the Mexican taxpayer through subsidies and transfers from the finance ministry. So the operating profits in E&P and exploration and production were wiped out by the losses last year in refining. And I think that's maybe a little bit early to say. All the evidence so far is pointing to the refinery, the Dos Bocas refinery, not being a success. To be generous, there's probably 20 billion was spent, and right now there's almost no refining production to speak of. And then there's a big financial cost, about 10%. That's a couple of billion a year associated with that refinery. And so the government's going to have to face up to, what to do with Pemex. In a piece I wrote in White Paper last year, I said there should be a kind of cooperative restructuring of the $100 billion debt, and at the same time, a deep restructuring of the company, especially in the refining side. So the pain gets shared between Wall Street, between the suppliers who've suffered most of the pain up to now, and obviously taxpayers. But for now, at least, it doesn't seem that any major surgery is being contemplated. It's more of the same with transfers from the finance ministry to shore up Pemex. But meanwhile, it's bleeding a lot of cash, and oil production obviously is falling quite quickly. It's 1.6 million barrels per day, and it got as high as almost double that a decade ago. So, and with the oil rig count going down, and suppliers, especially international suppliers, quite reluctant to work with Pemex because they're not being paid in full by Pemex. All the expectations are that the profitable part of Pemex, E&P, is going to get smaller, whereas the unprofitable part, refining,
is getting bigger.
Is either staying the same or getting bigger. So the maths some point isn't going to add up, but
reality will bite at some point, I would say.
Now, on the electricity side, I think participants are a bit more optimistic that the rules of the game are at least clear. CFE is in competent hands, and there is a kind of willingness to finance big projects that the country needs. We also finally saw, Eduardo, the ban on genetically modified corn, which we talked about last week. So we're going to have a sort of perverse situation in Mexico whereby we're importing, billions, 5 billion or so, of genetically modified corn. That's fine, but we can't produce it locally. So we're putting the local farmers at a massive competitive disadvantage. And the GMO corn, apart from, as of today, as far as I'm aware, being no scientific evidence that it's damaging, and the USMCA trade panel ruled as such, requires a lot less water than the corn, let's say, naturally grown. And with the water shortages in Mexico, having strains of corn that are less intensive in their water usage would be quite beneficial. But again, an example of a public policy that's going to, in the end, cost money.
Come back to haunt them, I suspect. I think those two issues, the energy and the modifying corn, which with all the scientific doubts that might bring up, I don't think the administration has thought them out carefully enough to understand what these two issues might represent in the future for the Mexican economy and its people in the end. We'll have to wait and see. But they're very committed. They're very ideologically believers in what they say, that we have to be energy sufficient with all different fuels to be produced here, when we have never proven to be very successful at producing them in a profitable way. I know nationalism is a very powerful tool, but I think in the end it will come to hurt you if you don't do it properly.
Meanwhile, the foreign press, especially the New York Times, has been, I think rightly so, very complimentary of the president and
very impressively,
on the handling of Trump. And all eyes are on April the 2nd and whether Mexico is able to escape big tariffs. And I think a lot of interest on some of Ebrard's comments, the trade minister, the economy minister, about Mexico potentially matching U.S. tariffs with the rest of the world. And if that happens, if Mexico matches U.S. tariffs on China, for example, or on Europe, effectively, Mexico and the United States are moving to a common market.
Correct.
A common market where the rules are set by Washington and not by an independent entity such as Brussels, but Mexico becomes part of a common entity. And you don't really need rules of origin if that happens, because if both countries are setting the tariffs in exactly the same way, whatever is imported in Mexico is the same as if it's imported in the US.
So that will make Mexico an attractive place to set up shop again, no?
If the US buys into this, and if there aren't tariffs between Mexico and the US, countries, Mexico becomes a powerhouse. Exactly. And I think that's why Abroad is offering
fighting for that.
And given that the US right now has much higher tariffs on China than Mexico does, that would also help curtail Mexico being a sort of so-called backdoor of US exports to the US, because Mexico would be putting the same tariff on China. So Abroad hasn't announced it, as far as I know, as a sort of official policy, been floated as a trial balloon, but it could be, if the US likes it, and if Trump, above all likes it, it could make Mexico very attractive.
Very attractive,
even though it would be giving up its sovereignty on tariffs to the US. But that's
one has to give him something sometimes, I guess.
It's a real pleasure to have with us today Ariel Fishman. Ariel is the founder, managing director of 414 Capital, leading independent investment bank in Mexico and advisory firm. Ariel, thank you for being with us today.
Well, thank you. Thank you for having me.
Ariel, just tell us a little bit about 414 Capital, a little bit about its history. I thought 414 usually referred to Milwaukee and the phone code there.
The area code. It's not actually. There's I've been asked many times in the past what the 414 means, and sadly I must say that the answer is nothing. It's not an address. It's not a birthday. A designer realized that the numbers 414 look a little bit like the vowels in the word capital, and so it was like 414 Capital. If you see the logo, they fit in there. But that's it. So just to tell you a little bit about who we are and what we do, we define ourselves as a corporate finance house, which is the broadest term we were able to find. Our activities, by far, what keeps us the busiest is M&A advisory, buy side, sell side. We've done work in, I would say, almost the entire continent, with the exception of some of the smaller geographies, but including the smaller countries as well. We have a pretty active portfolio valuation practice in 13 different countries right now, Mexico being the largest. We have used to be called a placement agent. It's now called Institutional Investor Services, because the name sounds fancier, I guess. But what we do is raise equity for generally international blue chip funds with Mexican pension funds, who are one of the few that still export capital. We have a consulting arm within corporate finance realm. And as of yesterday, we announced the creation of a debt advisory group, which is also, we believe, very complementary to what we do and what our clients need. So that's a quick summary about us. We're close to 50 people located in the US, Mexico, Spain, and Colombia. Close to 50 professionals. That's pretty much it.
So one of the things, Ariel, congratulations on the announcement yesterday. We'll get into that in a moment. One of the things we're interested in is cross-border M&A, particularly US firms expanding into Mexico through M&A. How are you seeing the outlook for M&A given the economic uncertainty right now? Are you seeing things slow down a lot? Are you seeing investors more focused on the long term and continuing to find attractive opportunities in Mexico?
Sure. I probably answered that question in one or another form several times a day, right? What I would say is I was taught early in my career that you don't make long-term decisions with short-term horizons or short-term criteria, right? I wouldn't bet against the US economy in the long term. I wouldn't bet against the Mexican economy in the long term. And I wouldn't bet against the relationship of the two or between the two. We are going through rough times. What do you do the first thing you wake up in the morning? Read the news, right? And the news are less than optimal. Yes, there's noise, and noise creates uncertainty, and uncertainty is not favorable for decision making. So we are seeing less decisions being made. But again, the way I try to put this into perspective, it's not the first time that Mexico and the US have their issues to solve. It's not the first time that Mexico goes through a rough period, and the US. The fundamentals are there. We have big populations, we have big economies, of course, in different proportions, the US and Mexico, but both relevant. We are a natural manufacturer, we're a natural exporter to the US, so it makes all the sense that this would continue without getting into the very complex geopolitics that the world is living today. I think it makes more sense than ever for Mexico to be the trade partner to the US, as opposed to other competitors that have grown in the past 20 years, mainly Asia, Southeast Asia, right? So solving the issues that we are hearing about today, my bet is that will continue. And so how does that translate into M&A activity? M&A activity will return. And when I say return, it's because it's slowed down in the past few months. First, we had internal issues to solve solely within Mexico. Today, they're a bilateral relationship to solve. When decisions are optional, by definition, you can choose not to do them, right? So if you can, you do. But some of the decisions are less optional, and that's optional is a very arbitrary word, but I use it as a label for the way that decisions are made in the sense that, if let me just make up an example. You're a poultry company in the US and something comes up in the poultry industry in Mexico. Well, it's pretty natural. You're going to see it regardless of the moment, regardless of what was in the news this morning. It makes sense for you to have it, and you're playing the long-term game. So those are the kinds of deals that we continue to see. We see less of the optional situations, PE, and we can get into PE in a moment, private equity, or absolutely discretionary decisions like family office investments or in general wealth allocation. So that's where we are. That's what we see right now. We do see a lot of also outbound investments from Mexico to the US. Uncertainty creates this flight to quality desire, and in general, stabilized, mature economies represent that quality. So just like in the financial markets, you see a lot of the capital going to gold or to less risky assets. Today, the wealth in Mexico is going to other economies, including the US. We see many increase of families, family offices, and even corporates saying, we are trying to expand, we want to grow in the US, we are highly concentrated in Mexico, and it simply makes sense. Which may bring us to the question, why was that never done before? Why do you need to wait till the news are, the way they are today to make a decision like that, right? That could be proactively done. It could have been done 10 years ago too. But we had good years. That's what we're seeing in M&A right now.
You've obviously seen scores of M&A transactions of American firms buying Mexican firms. And looking back on those transactions, some presumably have worked, hopefully the large majority, and some haven't. What lessons can you draw from the ones that worked and the ones that didn't work? What would you say to an American shopping around Mexico, maybe attracted by the lower valuations, the depreciated exchange rate, the long-term logic of Mexico-US economic integration? What would you say they should be careful about, and what would you say they should be drawn to?
That's a great question, and you indirectly mentioned the lower valuations. One word of advice would be valuations are important, but they don't make a deal. Perhaps more so in the private equity space, but as Warren Buffett once said, I prefer a great deal at a fair price than a fair deal at a great price. That's what I think. And so if valuations are attractive, that should not be by itself a decision factor. Words of advice. First, don't minimize the relevance or don't underestimate the relevance of a due diligence and a properly run process. We've seen people improvise. We've seen people assume that, well, it's Mexico, I'm sure I can do it on my own. Advisors are critical. Advisors that understand the local culture and the local minutiae and the nuances that are an integral part of the business environment locally. It's good to have a local partner that helps navigate the business environment as well, and the permits and anything related to the public sector, which is very complicated. I mean, it's complicated anywhere, but local knowledge is very relevant.
Let me go back a little bit to your first description of the relationship between the two countries.
Yep.
You sounded optimistic that in the long term, this marriage cannot be so quickly dissolved, that we've already grown into each other's modus vivendum, if you want to say so. So these hiccups that we're witnessing at the moment do not scare you. You don't feel them scaring off the long-term picture of the integration in North America.
Correct.
What can you tell us that would probably calm down some of those that are listening to us that are afraid of what they're listening every day in the morning news, as you recall?
Of course. So again, there's a natural need. The US and Mexico consume each other's products. And if that doesn't change, there's no reason for us not to import and export whatever each country does best. It's a simple principle of specialization. Some do guns, some do butter, right? Each has to produce and sell what they do best. We have labor, every day more qualified, but we have cheaper labor. We are exporters of labor in the form of migrants and paid in the form of remittances. We've always been, with an order, with a process that should continue to happen. If the US, let's say that the US is a consumer of basic products, right? They need to get them somewhere. And if the local economy in some industries is not competitive, then they have to import. Where should they import from? Again, I don't see a reason why we should not be the natural exporter. And again, without getting into the geopolitics, but the US already went through one Cold War. And some might question whether there is a second one already happening, right? And we are the substitute for that. We are the substitute exporter. That's really what I see. And we are also importers, by the way. Normally we think of Mexico exporting maquilas and cheap labor, but we are also big importers of US products and services, of oil, of many other things. And we still need those products. So why would that change? The politics come and go, and parties come and go, and elected leaders come and go. And we've seen that in Mexico, we've seen that in the US, we've seen that in every single country. The pendulum swings. And right now it's swinging in one direction, but one day it can swing in the other. And I'm not making a prediction of whether the Republican Party will stay in power for the next 4 years. I really don't know. And it's out of my scope. Yeah, it's out of my scope. It's just different times call for different decisions. And right now, the U.S. administration believes this is the way they have to go.
But in the end, they will recognize that the integration of the two economies or three economies makes much more sense than breaking them apart.
I believe so.
Let me go back to another element. You said that there were some internal issues in Mexico that also have created some upheavals or concerns. Would you go a little bit deeper into what do you see in Mexico that might not be working out as well as it should be?
Sure. Worth noting that I define myself as apolitical. I don't follow a party. I don't support one particular party. I support what I believe to be common sense. And I love Mexico more than I love my opinion on Mexico. So I'm not the one qualified to say how the country should be run. I respect decisions and hope that they are made in the best interest of the country. With that said, in the last year, there's been changes. And changes, as I said, bring uncertainty. People want a level playing field. People want to know that there's legal certainty and that if you're going to make an investment, you want to know where you're making it and what the rules are, right? I participate in an organization called the International Valuation Standards Council, which is sort of like the IFRS of valuation. It's a great opportunity that I've had to get involved in that world. And the CEO of the IVSC always says, there's a need for rules. Imagine that you go to a soccer match and no one knows what the rules are. How do you keep score of the goals? How do you know what's a foul, what is not a foul? How do you know what's an offside, what isn't? You need to know the rules, otherwise you can't play the game. And that may be an analogy to what the business community has gone through in the past few months with the change in the continuation of the ruling party, with the judicial reform. You need to know what the rules are.
Correct. So that once that gets settled, if it works, how the rules are going to work, people will start probably assessing better what the situation is within the country.
I think so. There's been what I think are good coordination efforts between the private and the public sector to go through what's happening right now, with the Consejo Coordinador Empresarial.
To figure things out.
Yeah, the president has made the Mexican president has made what I think are some good decisions in terms of, how to navigate the current times, of getting the business leaders involved. There's information in those news, right? All news are information, but when they say los empresarios, who are the empresarios? And if you look at the list, there's information in that list. And in my view, the quality and independence of the businessmen that get invited to these events has improved.
Yeah, and it's much more frequent than they were before. Yeah. So there is more communication probably between the two sides to figure things out a little better. So in that sense, you're also optimistic.
I'm bullish. I really am bullish, and I wouldn't bet against Mexico, as I said before.
You mentioned the valuation standards, and 414 historically and continues to be by far and away the dominant leader in valuation of private equity in Mexico. What kind of trends are you seeing in private equity? The foreigners are getting more and more money, but from the outside, it seems that they're spending that money in private equity outside Mexico, not so much inside Mexico. Is that true? Why is it true? Does it worry you? What should we look out for going forward?
Sure. I know more than I can say in a public forum because I'm an insider to many of the instruments, right? So I naturally need to be careful with the disclosure. Yeah, the disclosure and the line between what I know and what I say. I can say this. Math is powerful and math is non-negotiable. And when you have assets reinvested and growth in population, assets will grow, right? And they grow quickly. So the factor is something close to doubling in 5 to 6 years.
What's doubling?
The AUM. Okay. The growth factor in AUM is close to double in 5 years. And that's a lot of money to invest. So pension funds have the challenge of finding the adequate left side of the balance sheet. What are they going to do with all that money, right? If the economy supports it, great. I do believe, as some of the Scandinavian countries have done, that if you channel local savings towards internal development, you can generate a very interesting multiplying factor in wealth, and that in turn gives better yields to the savings, right? But there need to be some conditions for that, and we are not Scandinavia yet. So In some things, we maybe. The pension funds do have a challenge in finding the right assets because the public equities market, as you know very well, Damien, is limited. The options are limited. They're not really there. There's an issue with liquidity and depth of that market locally. The debt market is by orders of magnitude deeper, wider. There's more options, more alternatives, but it's very well covered. And then we get into the alternative space, right? There was what I think was a very correct decision made by the regulators back in 2007 of the creation of the CKD, which is for those of you who may not know, is basically a publicly listed trust through which pension funds can invest in alternative assets, originally within the Mexican territory. That was the language in the law. And then it was open to international investments. That generated a boom in the local private equity industry. And that over time morphed into more focus on the international GPs. Performance has to be there. The first time, it's an interview. The second time, it's a report, right? You have to see performance. You have to see the GP return the money, and then you say, okay, and then you earn the second chance, right? Or a second and a third chance. So that has to be there. The exits have to be there. The transparency has to be there. And again, without answering whether it's a yes or a no, those questions have to be answered. Transparency, performance, track record, communication. And then comes an issue of complexity, right? When fund invests in local alternatives, you have a more active supervision role than when you invest in some really large blue chip fund abroad and you say, it's not as simple as, but let me just, for purposes of exemplifying, say it's, here's the money, see you in 10 years. And that's really comfortable. It's convenient, right? And it's not necessarily wrong because that's the way most of the large LPs and institutional or real money accounts do carry out their investments. So that has been the trend in the market. There's more favor towards foreign managers, and there's also the benefit of diversification. Imagine that you're a Mexican employee, your job and your savings are exposed to the same economy. Whereas if your Afore savings are put abroad, at least if something goes wrong in Mexico, you may lose your job, but your savings are not going to lose value, right? So all those things are pushing the trend towards international managers. With that said, there is an interest both in AMEXCAP, which is the Private Equity Association, AMAFORE, the Pension Fund Association, and the regulators to develop the internal industry, right? So there are discussions happening about how to channel those savings towards local managers and give them the chance and give them the opportunity. I say if they perform at least equally well, why not, right? Because there's also that multiplier effect. But the returns have to be there.
Do you think it would be a mistake for the government to force them to invest in alternatives in Mexico more than is currently the case?
Because I've never been a regulator, I don't know how to regulate, right? So I can't say if it's a mistake or not. I stand by my prior statement about diversification and the need for performance. I don't know if it will be a mistake because no one has a crystal ball, and maybe if the local economy is coming back and it's coming back strong, and someone believes that, then this is the place to invest. So I wouldn't say it's a mistake. I just think consequences have to be assessed.
What sort of sectors do you think M&A would generate the most interest in the M&A world?
Well, I can tell you what we see right now. We're fortunate enough that we have a decent sample of what happens, right, within the firm, and especially after the acquisition of our competitors and friends and peers at Rion, we have a pretty decent sample of transactions, and we know what's going on. Agro is hot.
Agro is hot. Oh,
agriculture and agribusiness. Again, what we read in the news is el narco, but the reality is that people still want to eat.
We need to.
I do. I know I do, and sometimes more than necessary, right?
We're too.
Yeah. So agro is hot with some safety and security considerations. Agribusiness in general. For the past few years, and I've been saying this for a while, the sectors that we see are the ones that benefit from demographics. Businesses related to youth, schools, all forms of education, entertainment, businesses related to senior adults, senior population, senior care centers, healthcare. We're all going to
need them at some point.
Yeah, we're all going to need to go to a doctor and a hospital and a dentist eventually. So those sectors, we see them growing, and food is necessary.
Right. Software, technology, are they hot?
I think even during the hype of the startup /VC /technology boom, I brought what I think is a healthy level of skepticism to conversations. I don't think it was ever hot. I think it was there was a lot of conversation and there was a lot of money flowing, but businesses have to make money. They have to do other things. They have to solve problems. They have to bring solutions to clients. They have to generate jobs. They have to be conscious with the other factors, ESG, etc. Yes. But if businesses don't make money in the long run, they're not businesses. They're not non-profits. And these technology businesses were not defined as such. So again, I've been pretty skeptical since the beginning. I don't know how the wave ends, if it hasn't ended already, but there'll be survivors, there'll be winners and losers.
A lot of the winners will probably be global companies that can amortize their platforms over 100 plus countries. It's a challenge for a local player, whether it's Mexico or Colombia or Chile or Brazil or wherever it might be, to compete with the big global companies. I read that 40% of the profits of the S&P come outside the US. These big global American companies. The biggest media company in Mexico is Meta or Google. It's not Televisa anymore.
Yeah, correct. I mean, also add to what you just said, over 95% of the S&P 500's market cap is intangible. So the value doesn't come from, steel and machines anymore. It comes from intellectual property. That's a fact. But there has to be a business. What I don't think is sustainable is a model of exits for the sake of exits. Because eventually there has to be an exit to an exit to an exit, and someone has to make a business work, right? I'm old enough to remember the dot-com boom and bust twice. I'm old enough to remember the LBO boom in 2004, 5, 6 maybe, which was also the papa caliente, the hot potato game. Old enough to remember the financial crisis in 2007, 8, 9. Who knows, right? There seems to be a trend that repeats itself.
Now, it was interesting that you mentioned, Nadil, that you have offices in Spain, Colombia, the US, and Mexico. Why those countries?
By accident. No, I'm just being facetious. The Spain office is the easiest one to answer. It came with the Rion acquisition. There's Alex, we have a professional who's based in Spain and who's tried to take advantage of the flow of capital between Mexico and Spain because there's a cultural and business affinity. And of course, it's not just because he's there. It's because there's a reason for him to be there, right? So that's the history of Spain. The U.S. is where we started. The 414 is a U.S.-based company. We started in New York, even though it was later moved to Florida. But we've always had a foot there. Now we see as a hedge and as a source of or an avenue for growth, local domestic deals in the U.S. And that's why we have two very senior people that we brought onto the team in the last year or so, based in Texas, and we're continuing to grow. And we have two headhunting firms right now engaged looking for talent in the U.S.
Local
right now.
Transactions.
Local transactions, purely domestic.
Right.
It's almost inevitable for the cross-border deals to happen. They happen. Natural. They're natural. Yeah, because when Mexican clients approach us, we have the ability to say, by the way, if you're interested in something in the U.S., we have the acumen, we have the people, we know how to do that. And Colombia is a country that we started getting into through the portfolio evaluation practice because the industry needed it. And they had some challenges that they needed to address. The Colombian Private Equity Association called Col Capital reached out some time ago and they said,
are you interested?
We hear you're good at this. Would you like to get involved here? We said yes. That was maybe about a decade ago or so. And so that's how we established a presence there. And we have quite a few clients. And through the network, we decided to be more active and bring a senior advisor on board.
You mentioned, Ariel, at the beginning that yesterday you just announced that you're opening a debt advisory business. Can you tell us a little bit more about why you decided to do that, what its sort of products and services are, and why you think there's a gap in the market?
Sure. So the announcement was yesterday, but the idea was not, right? This is a project that maybe we had in our minds for about a year, and we did what I think is some at least responsible level of due diligence into the addressable market and the need, right? And also who the players are and what their opinion was on the need for a product like this. What we concluded, being an M&A house, or at least that being our main product, what we concluded is that covering only the equity side of the balance sheet was not sufficient. Naturally, M&A transactions are, for the most part, equity transactions, and that's that, right? But many of our clients didn't have what we thought was an optimal capital structure, right? Think of a oversimplified capital stack as senior debt, subordinated debt, something maybe in between, and equity. The right mix is not always there. Actually, within the consulting practice, we have a product that we normally offer to multinationals and conglomerates called balance sheet optimization. It's pure financial engineering. The deliverable is a PDF with, 80, 100 pages full of Greek letters that in the end says, this is how your balance sheet should look like, and here's why, and here's how you do it, right? We've discovered that many companies, their balance sheet, both left side and right side, are the result of a series of historical decisions and or accidents. But if you had the money today, or if they had the money today to decide how they want to look, it's very unlikely that they would look exactly like that. So what we say is pause, let's do a thorough analysis of what you have and how you fund it, and make a series of recommendations and potentially improve it, right? And that's how we noticed that companies' debt was not optimally managed. And I always worked, as I was mentioning before, I always worked under the assumption that all CFOs know how to work with banks. By no means minimizing the talent of CFOs. CFOs do their job normally very well. But dealing with banks seems to be like another talent that is not always there. And it's okay to ask for help. So we thought, well, we know credit, we understand it. We can bring on talented executives from banks who have done this for a long time and help. And that's what the purpose of this group is. It's called the Debt Advisory Group. That's how we called it. It's being initially led by a former executive of a large bank with over 20 years of experience in financing. The product suite is basically anything that has a due date. So it can be senior debt, subordinated debt, convertibles, mezzanine, project finance, greenfield, brownfield. We have to see what the market needs and adapt.
So it's not just loans, it's issuing
it's
financing in all its broad sense of the word.
Yeah, I think...
Do you have a competitor in the debt advisory?
We do. Sometimes the banks
do
it themselves.
Well. Yeah, correct.
Right?
But you would probably be more independent, so that would be a better...
Yeah, I mean, if it's a syndications desk, if it's a club deal, then the banks do it, and then they originate or structure for other banks as well. We can bring a lot of value to even to those banks. Again, going back to the sophistication or lack thereof of the clients, and again, it's not an absolute statement. Some clients need help. Some companies need help producing a thorough, detailed model, accurate model.
Sure.
An info memo that describes the...
People can't know everything, so if you can bring in someone that helps you out, and you could be that person.
I think the accounting firms do a bit, the consulting...
They do a bit
like
of that.
Deloitte has a relatively active financial advisory practice. You see like Teneo in the US now opened an office here in Mexico.
Mm-hmm.
You have obviously Rothschild more focused on the restructuring side. I mean, there are different firms in different parts of the...
What about law firms? They don't do the advisory, they just...
No, law firms will just collaborate with us and us with them.
Exactly.
Yeah. No.
They're not financial wizards.
Yes. No. It's they need us, we need them.
Correct.
And by the way, like any advisory firm, we work very closely with many of the top tier law firms, happily.
Ariel, I think we've run out of time. So thank you very much for joining us. Congratulations on yesterday's announcement and on last year's acquisition of Rion. And wish you the best.
Thank you so much. Thank you. On the contrary, thank you for having me here. It's always fun to chat, to meet, and chat with interesting people. And I'm around. If you want to invite me again, I'll be here.
We'll bring you back.
All right. Thank you.
So I think that's it for this week. Thank you for joining.
Thank you, Damien. Hope you'll listen to us again next week.
All the best.